Hey guys, welcome back to Toto Capital. My name's Liam, and in this video, I'm going to talk you guys through my 4-step objective rule-based strategy that you can use within the live markets. Okay, let's just jump straight in here, guys. Essentially, you need to ensure that you are using a rule-based strategy to ensure that you're not essentially going solely based off emotion. Okay, it's very important that you're following these rules, whether you follow my rules or somebody else's rules, but having that rule set and being able to identify exactly what you're looking for and then being able to execute that on a consistent basis is what it's all about. So let's just jump straight in. This here, bearing in mind this is Solana, okay? However, this can be essentially traded across all assets, whether that's stocks, crypto, indices, FX, you name it. This strategy can be used effectively and profitably in them markets, okay? Because essentially all markets really do act the same, okay, for the most part. So let's just jump straight in. Number one here on the checklist is our POI, okay? And what is POI? That stands for point of interest. And, it's very, very simple. That is literally just the area that we're looking to trade around, okay? So some people may call that a key level. Some people may call that a point of liquidity. Ultimately, they're all pretty much the same thing, but it's really having that objective way of identifying, okay, these are the areas and these are the ranges that we're dealing in, and, acting on that accordingly. So let's just use an objective approach. So this is on the weekly time frame. And what I personally use to identify my POIs, my point of interest, is the weekly fractals, okay? So this is a fractal low here. This is a fractal low, and this is a fractal high, okay? So essentially you can apply these to your charts by going over to the indicators tab at the top here, indicators, metrics, and strategies, in typing in literally fractals. Okay, if I can spell. Okay, so fractal, and it's the one by Rachel_T. So if you just type in fractal or fractals, it's the one by Rachel_T. At the moment, there's about 3.2k subscribers to that indicator. So apply that to your chart, maybe add it to your favorites so you've got that bookmarked. Okay, and that's ultimately what we're going to be using to identify number one, which is our point of interest. So let's mark this on. So this is the weekly time frame. This is our higher time frame point of interest, our higher time frame perspective. Okay, so we've got a fractal low here. We can mark that on with a horizontal line. And we've got a fractal high here. Okay, this is our most recent fractal high. This is our most recent fractal low. Okay, once you've marked that on, these are our point of interest. Okay, essentially, this is the dealing range that we're currently in. Okay, so essentially, if we're just in the middle of this range, which we sort of currently are, then you're taking a risk longing because price could easily come down to the bottom border, and you're taking a risk shorting because price could easily push back up and tag the top end of the range. Okay, so essentially this is your dealing range, and within that, within the point of interest and within the area, you essentially have around a 50% area which will act as a sort of resistance or support. Okay, often these are where you're going to be looking at targeting. So for example, first targets are going to be around the mid-range. Okay, and essentially you can identify these as discounts and premiums. So for example, when we're looking at long in the market, we want the market to be in the bottom half, okay, ideally in the bottom quarter, to ensure that we're getting a great discount on the market, okay. And likewise, when prices push into the upside, if we're looking to short, we want to ensure that price is in the top end of this range to ensure that we are getting a good discount within this range. Okay, so quite simple. I'm going to remove this off the chart. This is basically just a Fibonacci from the high to low. This is the dealing range with a 50% retracement. Okay, not too important right now, but maybe just something to note. And so that's how we identify our point of interest. That's on the weekly higher time frame perspective. Now, number two, let's drop down to manipulation. Okay, in particular, we want to see a run on liquidity. Okay, and let's drop down to the daily time frame so we can identify exactly what I'm talking about. So this is the daily, so we're getting a more zoomed in perspective. Okay, we have the highs over here. We can mark that on. Okay, it's important to use these daily closes here as a sort of barrier. Okay, these daily closes are very important when you're marking on your zones. Okay, next I want to identify the bottom half of the range, so we can do that by marking this on with a horizontal line, horizontal rectangle here towards the bottom end of the range, and you can see that we've marked this on in confluence with the bottom end of this range, so where the candle closes are. Okay, so this is the range that we're dealing in. Okay, and if you look here, if we zoom out, number two is we want to see manipulation. We want to see a run on liquidity. So what I mean by that is these are the pivot points that we're looking at trading from. These are the extremities of the range. Therefore, I'm only interested in taking trades when we are within the extremities, within our point of interest. Okay, so if and only if price pushes up to the upside, we can look for a short trade back down to the mid-range potentially. And if and only if price comes down to the lows and we see number three, which is our confirmation, don't worry, we'll get onto that. But this is just to highlight number two. We want to see a run on liquidity of these extremities. So if and only if we push into these highs and we see our manipulation, which I'll talk you guys through, and if and only if we run these the liquidity to the downside, and then we get our confirmation, then we'll look to long this market at the extremities. The reason why we use these extremities and these point of interest is because it allows us to get a very mechanical, rule-based and objective approach when looking at targets and invalidations. Okay, so it's very important to know when you're going to be wrong within the markets. So let's just play price on here. So we've identified our point of interest. We're looking for a manipulation and a run on liquidity, which is essentially just seeing these stops get taken out. So any buyers that got in this market too early, I want to see them manipulated out of the market. Once I've seen them manipulated, we can classify this as a deviation. Okay, and essentially we want to see the bulls, or people looking to long this market, I want to see them reclaim this area here, and then we can look to take that and look to target the mid-range as a sort of first target, and then ultimately back up to the highs, which will be your ultimate target. Okay, which is the top end of the range. Okay, so this is our lower point of interest, and let's play price on. We're only waiting for either the top end of this range or the bottom end of this range to be deviated and violated, and then we can look to act accordingly. So let's play price on. Okay, this is on the daily, as I said, on Solana. Okay, and what we've seen here is a run on liquidity. This is number two here. We've seen manipulation and we've seen a run on liquidity, i.e. what we've done is we had this low down here. The sellers have essentially spiked into these lows and we're starting to reclaim this level. Okay, so this is what you call a run on liquidity. We've ran these stops here. Okay, anybody looking to long this market early, their stops are going to be below here, and therefore we use that as fuel. Okay, we use that as fuel in order to move the markets. And the reason why this works is because when you get priced down on these extremities, the retail traders are going to see, one, this is a breakout, so they're going to start trying to short the market. They're going to short this market, okay? And they're also going to look to short the retest. So they're going to short this as like a sort of breakout play. So for example, if you drop down to like the lower time frame, you can see, we're getting like candle closes. This is on the hourly. We're getting candle closes below here. Okay, so the shorter time frame traders, they're going to be trapped within this market. They're going to be looking at shorting the breakout. Okay, so as you guys know, once we have people shorting the breakout, this will provide liquidity for institutions to long the market. Because as you guys know, in order for large volumes and for institutions to move the market long, they need a lot of sellers. So they need to entice them into the market. And that's exactly what this move's doing here, manipulating retail out of the market. Okay. So now that we've seen the deviation, we classify this as a reclaim once we can get a close above where the candles were failing to close before. Okay, so here you can see that's 131. Let's just call it 132, $132 on Solana. If we can close above here, then we can classify this as a deviation, and this is now a reclaim. So the bulls have managed to reclaim this area because we failed to close below here, and we've now deviated and we can close back within this range. Therefore, this should classify as the new floor within the market. Okay, let's jump over to here. So we've seen our point of interest. This is the area here. Number 2, manipulation, run on liquidity. That's exactly what we've seen here. That's the manipulation. Number 3 is the confirmation, which is waiting for the daily candle to close above the range low, which is here. So we've seen that close. Then we can classify that as a reclaim, and we expect this fractal now to hold and for buyers to step into this market. Okay, so that's number 3. Number 4, guys, and this is why this strategy is so important, because it allows us to have objective mechanical targets and invalidation. Because I know when I'm wrong here. I know when I'm wrong because so our order will go here, and I know that I'm wrong if price starts to break back below this area that we've just manipulated. Okay, back below the range lows. So if that does happen, I want to cut the trade, and I accept that I'm wrong on this trade. Okay, I may not necessarily be wrong because you may get another chance. You may see another manipulation reclaim, and then you can maybe look for another entry. Okay, but I'm going to be looking to cut this trade if we do break these lows again, because once we've seen that run on liquidity, this should provide the fuel in order to push price to the upside. So that's enough for me to go, okay, if we can get a retest of this area here, I'm going to look to long this market. Okay, in terms of targets, as we discussed, you've got a 50% correction of this range, so the midpoint of this range, which will tie in, you can see, with this horizontal here. So within this area, you can see that ties in around the midpoint of this range. So here, you can see this area acted as support, resistance, resistance. Okay, so this is your sort of key midpoint area where, sellers may look to step back into the market within this area. Okay, so if price pushes into here, you want to be cautious around this area. A reclaim of that area, you're going to be looking to push that back to the upside and test these range highs. Okay, so it's very, very simple, guys. We're just trading the ranges. However, we're waiting for deviations within that. Okay, so let's just look here. Our order is now in the market at 131,500. That's this area here. We're looking to target midpoint of the range. Let's just mark that back on for you guys. Midpoint of the range, which is in here. This is a first target, and then ultimately we're going to be stretching up to the upside if we can crack above that level, because then we're going to be off to the races, and we're going to expect the buyers to fill this range back up and test these highs. Okay, and then we can evaluate, because ultimately if we do get up to these highs, what we could see is a deviation reclaim, and then we could look to short this back down to the mid-range. Okay, but ultimately, guys, you just need to trade what you see. Okay, so that's targets mapped out, targets and invalidation. We know we're wrong if we break back below this low. We know we've got first targets in this mid-range, and we know we've got second target. So first target within here, second target within here, and that's all mapped out. Very objective. Okay, let's play price on. You can see the next candle retests our area where we're looking, and we're bidding off this area. Okay, we're triggered in this trade, and now we're riding this to the upside. So, it's very mechanical. We either stopped out or we hit or take profit. Simple as that. Simple as that. Okay, this is where it comes to you guys, where you need to decide, how are you going to manage the trades? I have my own personal management strategy, but as I said, it's personal. You guys, whether you might want to copy the same strategy, ultimately you need to find what works for yourself based on testing this. Okay, so first target smashed there, 160 psychological level, and ultimately it looks like the daily's closing above this area, which is a great sign. As I said, we can look for retests in further continuation. Okay, so if you want to be very aggressive, you could look for a scale in with this within this area and look to trade that back to the upside. But the more sort of simple approach would just be to long the bottom of the range, take profits at the midpoint, and ultimate profits at the range highs. Okay, that's just play price on, and you can see we are starting to push to the upside. We're starting to head to the top sort of quarter of this range, and then ultimately you're going to be looking at testing this upper area here, where we're going to expect a reaction. Okay, so price is off to the races. This trade's still not complete. First take profit there was around a 1 to 2, 1 to 2.25, around that. Price is currently a 1 to 3.8, but ultimately final targets are going to be a 1 to 5, 1 to 5.5 up at the range highs. And I do expect this to be hit based on how price is moving. You can see we're moving very impulsively here to the upside. Okay, so essentially this is a very, very concrete and a very, very mechanical rule-based strategy that you guys should definitely take a look at. So just to summarize, we've got POI, point of interest. This is the first area. This is the area where we're going to be looking. This is where we're of interest. We need to see price come into that area. Number two is we need to see the deviation. That's this here. Essentially, whether it's a wick below, candle close below, it doesn't matter. We want to see price come below the area of interest. Then we want to see number three, which is a confirmation via a reclaim of the fractal, and we need to hold above this area once we've seen the close above and the reclaim. Okay, and then number four, targets and invalidation. You've got most of your position coming off at around the midpoint, maybe 50 to 80% of your position, and then final targets are going to be up at the range high. You've got clear invalidation, which is just below your fractal low. That gives you a very sound area where that you're going to be looking to cut the trade. That's where you're going to expect that you're going to be wrong in the market if you do push back down into that area. And that's where you look to cut the trade. Okay, so this trade's currently not closed. Okay, I know this is very messy on the chart, and this is currently running. Okay, but yeah, I hope you guys enjoyed this video. This is a very insightful one, I hope, covering the rule-based mechanical strategy. Okay, and as I said, this works in all markets. It's basically just using, retail as liquidity and fuel in order to move price in the desired direction. Okay. One final thing maybe to note is if you can tie this with the higher time frame. So for example, looking at the weekly here, you can clearly see that momentum is to the upside. Okay, if you just zoom out, this chart is clearly moving from bottom left to top right. Okay, so clearly the momentum is to the upside. So this is on a weekly perspective. If you tie that in along with your, your daily bias, you can really increase further the probabilities of your trades. Okay, so that's tying in your weekly bias along with your fractal deviations and reclaims. Okay. And yeah, that's it for this one. Please like, comment, and subscribe, and let me know your thoughts below, guys. Okay, I'll see you in the next one. Take care. Bye bye.